Hello, and you're welcome to Global Business Insights, where we look at headlines from a deeper business perspective. Former President Donald Trump is safe after his Secret Service detail opened fire at a man with an assault rifle at his West Palm Beach, Florida golf course, in what the Federal Bureau of Investigation is calling an assassination attempt. The rhetoric from both sides and often contentious style in coverage of the elections certainly need to be toned down. The gun culture in the US also a problem. On Saturday, it was reported that China's retail sales was up 2.1% year-on-year in August from 2.7% in July, worse than the 2.5% expected. China industrial production also increased 4.5% year-on-year in the same period versus 4.8% expected and 5.1% in the previous month. That is in July. We also get a slew of other data this week. The New York Empire State Manufacturing Index kicks off the U.S. calendar today. Tomorrow, more data on retail sales, industrial and manufacturing production, business inventories. The center stage is taken by the Federal Reserve's FOMC interest rate decision on Wednesday, September 18, plus the usual weekly mortgage applications. On Wednesday, we also get the Energy Information Administration's report on U.S. crude oil stockpiles, building permits as well, and housing starts data. The Bank of England is widely expected to leave interest rates on hold on Thursday's NPC meeting. On Thursday, we also get U.S. weekly initial jobless claims, followed by the Fed Manufacturing Index data. Like the Bank of England, the Bank of Japan on Friday is expected to hold its policy rate at 0.25%. The Nigeria National Petroleum Company Limited NNPCL has deployed over 100 vehicles and personnel to the Dangote refinery to lift petrol. Dangote clarified that products were sold to NNPC in dollars at a substantial saving compared to the current import prices. NNPCL also told the Nigerian Upstream and Downstream Petroleum Regulatory Authority (NNDPRA) that it would not be importing petroleum products from October if the price is right. Aliko Dangote has a personal stake, and we saw that hands-on approach in troubleshooting. The big lesson here could be that government and its institutions should be restricted to regulation and supervision and should exit the supply chain and commercial operations for the private sector with market-determined prices. NNPCL with its refineries should also be extensively privatized. Indeed, it's the beginning of a journey, a new chapter for downstream in Nigeria. Nigeria August CPI, that's inflation data, is out later today. You recall we saw headline inflation slowing for the first time in almost 2 years as the rate eased to 33.4% in July 2024, down from a 28-year high of 34.19% in June. Today's data could confirm that inflation may have peaked in July and is trending down. Recently, it was reported that Katsina State Governor, that's in Nigeria, Dikko Rada, approved over 340 million naira to restore electricity supply to the state-owned University Umaru Musa Yar'Adua University, Katsina, enabling the institution to resume after extending its mid-semester break. Still on electricity issues in Nigeria, the federal government is expected to pay about 180.8 billion naira as electricity subsidy for power consumers from bands B to E that have had their tariffs frozen since December 2022. In addition, the Nigerian Electricity Regulatory Commission (NERC) recently fined the 11 distribution companies, discos, roughly 8.3 billion naira for overbilling their customers in recent times, with instructions to compensate the impacted electricity consumers. We look at the issues facing Nigeria's much challenged electricity sector with Toyin Abiola-Salami Partner, Audit Services, KPMG West Africa, and an expert in the electricity sector speaking to some of the issues.
Nigeria's power sector, despite its potential, faces several significant challenges. We have an installed generation capacity of around 18,000 megawatts. However, sadly, only about 4,000 to 5,000 megawatts is reliably distributed due to frequent outages and outdated infrastructure. In comparison, South Africa, with its Eskom utility, has a generation capacity of approximately 45,000 megawatts. Despite the issues in South Africa, the infrastructure and generation are a lot more stable, which allows for better reliability and coverage. According to the World Bank, 55%, only 55% of Nigerians have access to electricity. Yet this access is often unreliable and it affects our productivity and our daily life. By contrast, South Africa has near universal electricity access due to more consistent infrastructure investment and maintenance. So what are the challenges? Why can't we make the power sector in Nigeria work? Some of those challenges include infrastructure deficiencies. If we think about it, like I had mentioned earlier, 18,000 megawatts as our generation capacity, yet we can only produce or generate 5,000 to 4,000. Our infrastructure is outdated. It's in urgent need of modernization. And this results in frequent failures and maintenance issues. Our people, sadly, some of our people consider electricity as their God-given right and not a service they have to pay for until we develop laws that ensure that citizens who steal electricity are accountable for it. We'll continue to see illiquidity in the sector. Another thing that we face is the dependency on natural gas. Many Nigerian power plants rely on natural gas, and we all know the stories around the vandalisms of pipelines and other operational inefficiencies. And all these create major bottlenecks in the supply chain for our power plants. There are also those financial constraints because what has simply happened is that there's a significant gap between the cost of electricity production and the revenue that's generated. Remember, I had said some people steal electricity, so even being able to recoup the cost is quite difficult. And so the tariffs themselves cannot cover the cost of producing electricity. There are some regulatory and institutional challenges, although Nigeria has introduced reforms like the tariff adjustments. Implementing these still remain a challenge. We would need stronger governance and regulatory frameworks to make this work. So is all hope lost? No. Despite these challenges, Nigeria is making progress. Just recently, the NEC announced that Nigeria has set a new power generation record of about 5.3 megawatts. The government has also made plans to invest about $800 million to further develop the sector. There have been some international partnerships, particularly the ones with Chinese firms to supply 1.4 million electricity meters, and there have been a number of MOUs that are focused on renewable energy. So those are some of the good things that have happened. We've also received significant support from international financial institutions. So, for example, the World Bank has restructured a $350 million loan for 7 power plants. The African Development Bank has approved $500 million for a new energy program and a $1 billion fund for sector reforms. We've also made some progress in metering and infrastructure. So Nigeria, the federal government, has allocated about 21 billion naira for prepaid meters, and USAID has mobilized about $245 billion for infrastructure and renewable projects. NERC has recently approved 8.1% tariff cut for Band A customers, and they've also unbundled the Transmission Company of Nigeria, that's the TCN. Gergu Power and Siemens Energy are currently upgrading the Gergu power plant, while BAT Nigeria has recently inaugurated a solar power plant in Ibadan. So what do we have to look forward to? There's very cautious I would say there's cautious optimism for the sector's future. Until there's enough capital, we'll continue to see a proliferation of off-grid solutions such as renewables, low-capacity gas plants that are leveraging on CNG technology. All these solutions are currently being championed by the RAN. We also hope that the mindset of our people will change such that they start to pay for electricity rather than steal it. I know some years back in India, they had experienced the same thing, and the government had to introduce very strong punitive measures for those who stole electricity. And so that has significantly reduced there. So until our government shows the will to do the same here in Nigeria, we may have a challenge there. But looking forward, we expect to see more positive things coming through from there. And in conclusion, I mean, really, while Nigeria's power sector faces significant hurdles, there are a number of recent developments and ongoing investments that give us hope. We hope that they're able to lay a strong foundation for future growth and provide more reliable and efficient power in Nigeria.
As the U.S. Federal Reserve Policy Committee decides this week on how much to cut rates, many analysts expect that the uncertainty on many geoeconomic parameters will lead to more caution to start on a measured note. Those calling for 25 basis points argue that the inflation battle is not yet won, given that services inflation remains high. Bank of Canada Governor Tim Malcolm over the weekend in an interview said he's not ruling out more cuts. The Bank of Canada had trimmed rates by a quarter point 3 times in a row since June, bringing it down by 75 basis points to 4.25% earlier this month, as inflation in Canada in July fell to a 40-month low of 2.5%. As we get more cuts to rates, how will all this affect emerging economies, especially Africa? We repeat our chat that we did last week where we looked at some of the implications. As Western economies cut rates, the monetary climate all over the world will see some relief. According to a recent report by the IMF, the era of tightening resulted in a sharp slowdown of Eurobond net issuance by emerging market and developing economies, down 70% relative to the prior 2 years. Also, the tightening led to net Eurobond outflows totaling about $58 billion due to maturing Eurobonds exceeding abating new issuance. As rates become more affordable for net borrowers, there is already a recovery in Eurobond issuance to the tune of about $40 billion in the first quarter of 2024, as countries such as Benin and Cote d'Ivoire return to the market. The onset of a Fed easing cycle supports an additional rebound in Eurobond issuance and a broader revival of capital flows to emerging markets and developing economies, and of course increased dollar-denominated debt volumes. Lower interest rates create the opportunity for debt-burdened EM, that's emerging markets, to refinance more expensive borrowings to reduce their debt servicing costs. As appetite for EM assets is revived and capital flows back, it's an opportunity for Africa to strategize afresh, not misusing this opportunity by ushering a new phase of profligacy. Priority should be given to technology infrastructure, education and health, on getting the basics right and repairing foundations. Both recurrent and capital expenditures have to be comprehensively re-examined. New paradigms for governance are needed to get better value and improved productivity. We should have learned from the tough era of tightening what we really do not need and what we must have. We just saw a stampede into Nigeria's first local dollar bond, massively oversubscribed. Access to foreign capital is less the issue. The bigger challenge has always been judicious spending, discipline, and project conceptualization and plugging leakages, reviving productivity by cutting waste and killing the monster of corruption. Asian stocks were mostly mixed, with Hong Kong stocks falling as investors digested downbeat economic data from China and awaited the Bank of Japan's meeting on Friday. Markets are also positioning to what is almost certain to be the start of an easing cycle in the United States. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thank you very much for watching. Bye-bye.